I got out of the stock market in 2010, and because I just didn't trust it anymore. And I've been listening to you, and I've regained trust through
Mm-hmm.
your ministry. And I just recently, got everything out of Edward Jones into TD Ameritrade, and I'm just wondering, should I just get a dartboard and go to your buy list and put them up there and start throwing darts, or is there?
Yeah. Well, here's the thing. So I'll tell you, I'm glad you did that, Paul. So here's what I would say to you. Don't ever buy a stock that is not on my buy list. So you see my broad list, I got 180 companies there and mutual funds. And you look at that and you say, well, I love that company or this company or that. I think I'm going to do it. Don't ever do that. It's not the intent. But things go from that broad list over to my buy list. And they come off it and they go on it. If they come off it, it doesn't mean you sell it. It means you hold it. But don't put any new money to work in the market. And I emphasize new money unless it's on my buy list. Now, if you own a stock and it is tanked, and you want to buy more of it to lower your share price, I'm all for that. And you don't have to wait for it to be on my buy list to do that. But I would just look at diversifying through my buy list. Look at my asset allocation model for your age group and look about diversifying through that buy list. And so, yeah, I think that if you own an international paper and you own a Marathon Oil, they're two very diverse, different kinds of companies. And I think that you should first, as you get started, look to have good, solid diversification in that. So, yes, I mean, go through that and do that with the buy list, not necessarily just because you might have a couple of darts that are all land in energy. I wouldn't want you to do that. I want you to diversify. So, yes, I would do that, go to the buy list. But here's the thing that I want to emphasize. I am not with my buy list emphasizing that people need to be getting into the market. What I want to do is provide a source of things that you can go into the market with safely and biblically responsible for the portion of your portfolio that you are exposing to the markets. So let's say you're exposing 25% of all that you own, all that you have to the market, then it's for that 25%. So just keep that in mind because I do believe that we should still have a significant cash position. So, yeah, I think you're doing the right thing. I'm glad you're doing it. And just keep tracking with me. And I really believe in the long run you'll do great.